Hello dear students, welcome to Devika's Commerce and Management Academy. We learned Accounting Standard 7 Cash Flow Statement. Now entering into the Accounting Standard 10. What it is saying Accounting Standard 10? So it's talking about events after the balance sheet date. Events after the balance sheet date. Very easy to remember. You know balance sheet very well. And how to handle the balance sheet. What is balance sheet? Detailed information you have. Just recollect it. If you have good idea, good command over balance sheet, this accounting standard 10 is quite easy. What it is saying, just remember in 2 lines, events occurring after balance sheet date. Events means some transactions, some incidents. Okay, events occurred after balance sheet date are those significant events of both favorable and unfavorable. Few events that are occurring after the balance sheet preparation, so which are having significant events for both favorable and unfavorable. It can be adverse or in adverse. So favorable, unfavorable nature, which emerge between balance sheet date and date on which balance sheet financial statements are approved by the board of directors of a company and by corresponding approving authority of the firm. Simple words you can remember. Few events which occurred during the preparation of balance sheet or after preparation of balance sheet, the events can be favorable or unfavorable. But with the approval of board of directors, with the approval of right authority, the balance sheet already prepared or under the preparation. But these events happened. What to do? That events which are to be included or not included, this we are going to discuss in the accounting standard 10. Once again you read it, it will be clear for you. Events occurring after balance sheet date are those significant events of both favorable and unfavorable nature which emerge between the balance sheet date and date of which financial statements are approved by board of directors of a company and by corresponding approval authority of the firm. Now events which are to be included or not included. These things we are going to discuss in the accounting standard 10. So here you have to understand two things. One is objectives of Indian accounting standard 10. What are the main objectives? Two things are there. Two objectives. Why do we prepare this? Why to understand this accounting standard 10? First objective is to increase the accuracy and applicability of the financial statements. Financial statements, we wanted to see the accuracy and applicability. Perfect. The events which already taken place are going to take place, which are not included in the financial statement, that is to be included or not included, how, and all these things, maximum accuracy we wanted to see. That is the main reason of this accounting standard 10. This is main objective. Second objective is to report the events occurring during the reporting period. To report the events, report these events occurring during the reporting period, I mean during the preparation of the period. So these are the main two objectives of this accounting standard 10. Now you can power off, you have to adjust it anyhow. So where we are, objectives we learned. Now remember two things, that is events are two types of events. One is adjusting events and non-adjusting events. Adjusting events means these events can be included. These events can be included during the preparation of financial statements or balance sheet. Non-adjusting events which cannot be included, there is no possibility. These events we can just mention it and leave it, but we cannot include it in the balance sheet. Adjustable events and non-adjustable events. Okay. Now let's talk about the adjusting events. Adjusting events, few points you have to remember. One thing is that the events which provide additional proof of existing, means adjusting events which can be adjusted. When we can adjust it, the events which provides additional proof. So here we are able to give the additional proof, then only we can say it as adjustable events. Additional proof of existence with conditions at the balance sheet. Additional proof is there with conditions in the balance sheet, we can adjust it and we can include it. Such events are adjusted in financial statements after the reporting period of financial year. After the reporting period of financial year, such events can be adjusted. What kind of events? Few examples. First one is the sale of asset after reporting period. Reporting period, everything is over. Now we are selling the asset. Sale of asset is occurring. So this can be adjusted. Adjusting events. Sale occurred but after the reporting period. No problem, we can include it. This is one kind of transaction, one kind of event. Another example is the settlement of court case after the balance sheet date. Balance sheet date is over, settlement of the court case is occurred here. This also can be adjusted. So few things like this we can adjust it, or we can say it as adjusted events. Second one is non-adjusting events. The name itself is saying it cannot be adjusted. Non-adjusted events. What are the non-adjustable events? Simply you can say it as a non-adjusting events is to be disclosed as a separate note, which cannot be adjusted, but we can disclose it. We can mention it with a separate note in financial statements. What kind of items are non-adjustable? Examples are given. First example is the disposal of current business. Current business we are disposing, which cannot be adjusted. Okay, one case. Another case, the purchase of asset which was held for the sale as per Indian Accounting Standard 105. We are purchasing asset and which was held for the sale. We are purchasing the asset, but this asset is for sale as per the Accounting Standard of 105. Accounting Standard 105 we are going to learn in further classes. If it is under that case, if we are purchasing it, that cannot be adjusted. There are few more examples. Another one is the implementation of restricted business. Implementation of restricted business. This business is restricted. If we want to implement anything, we wanted to include anything. So this is also cannot be adjusted. And the change of tax rates. Tax rates are changing. The change of tax rates implemented after preparation of balance sheet. Balance sheet is prepared, submitted, everything is over. Now there is a change in tax rates which cannot be adjusted. So this is another transaction. And also the decrease of market value. Market value here it is decreasing. Decrease of market value of assets after end of the reporting period. Like this one also. Total 5 examples are given. 1, 2, 3, 4, 5. So like any such kind of events are there which cannot be adjusted. When we cannot adjust, what we can do? We can just prepare a special report. In the special report we can mention that these are the events occurred which cannot be adjusted. Which cannot be adjusted. This is the point here. Adjustable, non-adjustable events. Am I clear about this? Events 2 types. Adjustable, non-adjustable. Now, as per this Indian Accounting Standard 10, few things are to be disclosed. Those things we are discussing in the disclosure of events. Disclosure of events. What are the disclosure of events? 3 points we have to remember. Disclosure of events means few things we have to disclose. We have to mention it. We have to specify it. What are those 3 things? First thing is that date of approval. Date of approval means date of issue of financial statements by the approval of authority should be disclosed. What is the date of approval? On what date it got approved by the authority? That date must be disclosed. Clear? It is saying in the heading itself only, date of approval, on which date the financial statements got approved by the authority members, the date we have to issue of date should be mentioned, should be disclosed. Authority should be disclosed. This is one thing. If the organization intends to modify date, they have to mention it. Second clause is here, if the organization intends to modify, if they want to modify the financial statement, the reason for modification must be disclosed. Here 2 points are the date of approval. On what date it got approved by the authority, and if any modifications you are doing it, if the organization intends to modify the financial statements, the reason, what is the reason for the modification, that has to be mentioned. Date of approval, date, and also if any modifications, what is the reason for the modification. So this is first point, disclosure. Second point is updation of disclosure. Some updation of disclosure, you are disclosing something, what is that updation, so that you have to mention. So here you have to remember few points. The information reported in the accounting period, the information reported in the accounting period needs to be updated. Whatever information is to be needed, that is to be updated once the organization receives updated information and immediately after accounting the or reporting period. If the organization comes to know that there is something is there, then that updation you have to receive it immediately. That is what we are talking about, updation of disclosure, what you can disclose it. Once again read, the information reported in the accounting period needs to be updated once the organization receives updated information and immediately after accounting or reporting period. Okay, this is to be updated. And the third important thing, disclosure of non-adjusted things. Adjusted things you are disclosing. What about the non-adjusted things? That also you have to disclose it. So disclosure of non-adjusted things. Here, mainly important thing you remember, the nature of the events. Non-adjusted things are there, then that nature of the events you have to mention it. What kind of events are unable to adjust it, the nature, and the statement explaining the events which cannot be estimated, and the statement of explaining the events which cannot be estimated. Why? So these two things comes under the non-adjusted events. Now in this point, disclosure of events, we spoke about 3 points only. One is date of approval and updation of disclosure, disclosure of non-adjusted. Here approved, adjusted, here non-adjusted, and this date of approval. Okay, very important and easy thing to remember. Take a screenshot, then after that I'll explain you how you can remember it easily, a quick method to remember. Okay, take a quick screenshot. Now how do you remember this? Accounting standard 10, events after balance sheet date. 10 means events after balance sheet date. Main important things, remember, understand the concept. Twice you read it, you'll understand what it is. Then after that, first concept is objectives of accounting standard. Accounting standard, what are the objectives? 2 objectives are there. Objectives are over. Next, events. Second point, events, you remember. Events are adjusted, non-adjusted. What are adjusted, what are non-adjusted? Then after that, third point, disclosure of events. Disclosure of events, only 3 points are there. One is date of approval and updation of disclosure and disclosure of non-adjusted. 3 points, that's all. With this, you'll be able to write in the exam very clearly without any doubt. Hope it is clear. It's visible also. Okay, in the next class, we'll see Indian Accounting Standard, another method. So just stay connected and also practice well. Don't forget to share these videos. Good luck.